Hello my fellow freedom builders, and welcome back to the channel and to a video where I will go through another mining video. A lot of you have asked me about mining stocks, and since I have made a couple of videos about gold mining, I've gotten a lot of questions about the silver mining as well. And I am looking into a couple of silver mining stocks, so I thought I would take one of them and make a video of it today. So today we're going to have a look at Pan American Silver Corporation, and before we go into more of that, please remember to subscribe to the channel and like it if you do like the content here. Alright, so the Pan American Silver, or the entire silver mining industry, have been a bit down in the later years. And let's just have a look at the chart shortly here. We can see the Pan American Silver Corp here on a weekly chart and on a daily chart. And as you can see, it has gone absolutely crazy, and it is up with 250%. And I know that a lot of investors, especially value investors, would say that that's simply too much. 250%. That is too much. It is not value anymore. If we have a look at the latest years here in the silver mining industry, this is of course just one of them, but we can see that the Pan American Silver here, I should say I have it in US dollars here. It is a Canada based company, so you could also take it on the Canadian Stock Exchange. But you can see it has been up here around 40 before a couple of times, in 08 and again in 10-11 here, and then it has, along with the silver price, been shot pretty much down up until now. So of course the question is, can it go higher than the 40 here? And we'll have a look at that today. What I'm going to do is I'm going to look a bit at the silver pricing, because that has a lot to do with the silver mining, of course. As you might recall from my mining video, where I did an overall look at the mining as a sector, silver miners, along with the gold miners and copper miners and uranium miners and so on, they are of course dependent on the price on the commodity that they produce. And to have a look at the silver, we'll look at XAG USD here. And we can see that lately silver has absolutely risen in price at an amazingly high speed here. And that is of course one of the reasons why the entire silver mining sector has gone up in price. As we can see here, there was a lot of talk about silver when it hit this. I think pretty much every technical analyst in the world looking at commodities, we're looking here at silver around 18, 19 here. I know of course that a lot of traders are looking at the shorter time frames, and we can see how the 4-hour time frames, it made some very, very nice buy signals here around 19. So those of you that have been in here have been able to make a lot of money there. We'll not look at it at that short time frames, we'll simply just have a look at it here. And of course you could say, shouldn't it get a retracement? Yes, it probably will get some sort of retracement, but there is a very, very strong support area down here. So of course it can go down 10%, and that will also in the short term hit the silver mining corporations, of course. Another thing that is important to realize is, let me just find it here, that there's something called the gold-silver ratio. Because gold and silver are the two, they're of course the two metals that most people think are pretty much alike. They're both used for jewelry and so on. But it is important to realize that silver is actually a lot more used in the industrial world than gold is. It is used, I think it is about 70-80% of the silver production each year that is used for industrial production. For all sorts of production products. Of course, then something goes for jewelry, some for the bullion, silverware. Actually, also a percentages of the silver goes to photography still. I was a bit amazed of that when I found out of that, but apparently it's still a thing to have silver used in developing pictures. So the gold-silver ratio tells us something about how much more expensive gold is than silver. And if we look at all the years we have price data for, back into 1915 here, we can see that the level we are at right now, where the gold is so much more expensive than silver, has only been seen a couple of times. And both of the times we have been up here, it has gone way down. You can see, and it was actually from 1940, 41 here, and all the next 25 years, we could actually see that silver gained compared to gold, or gold's lost value compared to silver. Then it started to go up in the 70s here, and dropped again from 91, and the next 20 years here, and then it has gone way up. And right now we are at a historically high level. Let's just have a look at here for the last 30 years, 20 years. Here you can see the latest rise in silver price that makes this gold to silver ratio go down. So we don't know if we are at a brink of another massive move down, but we can see it is a bit funny here to see that at least the last time here, and also the time back in the 90s, it was just around a recession where the gold price started to lose value compared to the silver. It wasn't at the dot-com crash here, but it was again in the financial crisis in 2008. So we might be on the brink of a complete collapse in this gold to silver ratio, and that would definitely make silver a very interesting commodity to invest in. So with that in mind, let's have a look at this Pan American Silver Corporation to see if it is something worth investing in. First of all, as I always do, let's have a look at a very quick glance at the fundamentals just to see, is this something worth looking at? And as you can see, the quality of earnings is up. It has a market cap around 6.5 billion euro. So that is way larger than the little gold mining junior I was looking at the other day. We have great momentum. Value is not great, but that is that goes without saying. When we have a price going up like this, it is hard for the value numbers to be high, because this number would say, for instance, that the PE ratio is way too high. So that is one thing. We have the momentum, of course, is great, and the stock rank is at 83, so that is way within our normal here. That should be above 70. As I said, the PE ratio 30, maybe a bit steep here, but the PEG ratio is 0.9, meaning that when we look at the PE ratio and divide it by expected future growth, then we actually have quite a good ratio here, meaning that we are not paying an insane amount of money for future growth, because we should remember that the PE ratio at 30 it may be too high, but if there's no growth. But if the company doubles their earnings next year, this number would drop to 15 if, of course, the price was the same, or if we bought it at a certain price. So a couple of years with doubling the earnings would bring the PE ratio we are actually having the stock at way down. They are paying a little dividend here. I'll get back to that. We can see that the return on capital, equity and margin, it's not the numbers we're used to see, but they might grow quite a lot. And I'll get back to that as well, because there are some intrinsic things in the Pan American Silver here that might boost the earnings quite a lot. One of them, of course, is the silver price. If that shoots up, we will, of course, have some operating margin, something like that. Return on equity, that is way better. We have a Petrosky score at 8, which is great. We have a Altman C score in the green zone, meaning that there's not really any risk right now, any risk of going bankrupt. So that is great. We have the earnings per share going slightly upwards. That is great. It has been in the negative here 5-6 years ago, but right now it's looking good. Earnings per share growth. It is expected to have a loss here in 2020. That is due to the virus. They had to shut down some mines. So that is, I assume, a one-time thing here. But then in 21, it is assumed to pick up again. We have the operating cash flows, which is going very well up, just as we like to see. Then they have some quite stable capex here, capital expenditures. And then, of course, the free cash flow, which is also going up nicely. What do we have down here? We have the dividend, 0.4, 0.5% in dividend is not amazing, not at all. The dividend cover in right now, this is a trailing 12 month, but otherwise it is quite okay actually. Had a dip in 18, but otherwise the later years they have been quite above 2, so that is what we like to see. Working capital, meaning liquidity they can use right now, they have $500 million, which is great. Not really much debt, and we can see that the interest coverage, current ratio and so on is absolutely where they should be. We can see that the expectations for revenue, net income and so on is going up. The analysts are saying great buy here, and as we can see here, the estimate is going up for 21. So just having a quick look at the Pan American here, it actually tells us that this could be something we should look into. So let's have a look at the company itself. If you look at the company, they have a very nice website here, and as you can see, just looking at the front page here, or this is actually under operations, but looking at this, they're producing 25.9 million ounces of silver each and every year, and they have the silver reserves at 557 million. So they actually have reserves at 20 times their yearly production, and they actually have even more because there is a mine right now that is shut down in Guatemala where there are also a lot of potential, but that is not calculated into this. Then they have the cash cost per ounce silver. And this is not the thing we normally call the AISC, all-included costs. That one is actually more than double as high as this. But they are one of the mines that are actually producing at a fair price. What we can see here is that they are very well diversified, meaning that the gold mine I showed you the other day, the Caledonia, they only were in Zimbabwe, and there is a lot of political risk in Zimbabwe even after Mugabe went down or died. So Zimbabwe is, and that is one of the things many of you have pointed towards, that Zimbabwe, you might not be really interested in putting money into a company that only had one mine, and that was in Zimbabwe. So here we have several mines, I think it is 9 mines actually over these countries. Mexico, which is, I would not call a high political risk here. Peru, Bolivia, I don't know really anything about their political environment. Argentina and of course Canada, you would call a very low risk. So they are spread out over a number of different countries. There is the mine in Guatemala as well. And that one shows a bit about how political risk can interfere on mines, because in Guatemala the governments claimed that the former owner of the mine hadn't fulfilled some of their some of the things they should, and that means that the entire operation was shut down. And they have a huge mine down there. I think they are reserved for around 500 million ounces of silver there. So that is quite an amazing power such a government has. But these are very well diversified, and even though the Guatemala mine is shut down right now, they hope to own it later, then they are still making quite a lot of money. Let's go out into their investor material here, the latest from July 2020. And as always, remember that when we are reading these pages, there are 32 pages here. This is a 32-page sales material, meaning that they are, of course, they are giving some of the info, or hopefully all of the information that we as investors need. But they are painting a picture where they are trying to sell the idea of investing in Pan American Silver. Just to say that people are always looking happy in these pictures, and we are not seeing any environmental damages and so on. So just keep that in mind. All right, let's go through it here. It is the world's premier silver mining company. 9 operations in the Americas, meaning North and South America, of course, and Latin America. It is the largest, they have the largest silver reserve base globally. Mineral reserves of, as I mentioned, just over 500 million ounces of silver. And then, of course, they have a lot of gold as well. And they're actually a medium-sized gold producer, as I'll show you in a second. And that is where most of their earnings has come from so far. What I do like about them is they have a 26-year track record. So they're not some sort of a new upcoming junior mining company where we don't really know where they'll be in 5 or 10 years. We can draw some lines here and see, have they been able to manage this company for the last 26 years? And they have. Industry leader in high margin, low cost production. I'll get to that in a second. Strong financial position. We saw that just a second ago. They have $500 million in liquidity they can use. And there are 3 large catalysts for growing shareholder value. And that is one of them I just mentioned. That is the Escobar Mine in Guatemala. Large, already built silver mine. Everything is ready for production. The only problem is that the government shut them down, so they are working hard to get that up and running. And as far as I can tell from the analysts, everybody expects it to happen, but nobody knows when. So it can be in 6 months, it can be in 3 years. Nobody knows it. And I don't know much about Guatemala, but there might be some slow work procedures there in getting something like this up and running in Guatemala. But maybe they are actually in need for the foreign currency, so they might be interested in getting up and running. But as far as I can tell, as soon as this one is up and running, it will really boost their earnings. I just found this graph here, and this is from Seeking Alpha, projected Escobar mining revenue and income from mining operation at various silver prices. As we can see, the last 3 lines here, it is divided into how many days it is up and running per year: 270, 300, and 330. We saw here with the virus that they had to shut some of their mining operations down for, I think it was a couple of months, and they are up and running again. But of course, some days can be taken out of the equation. So as we can see here, with the different silver prices, even at the lowest numbers of running days, 270 per year, we can see that at silver prices at $20 or $25, it would add $250 million to their earnings, and something like $500 million in their revenues per year. So that will actually have a huge impact if this is up and running. Now, the 2 other catalysts, the La Colorada in Mexico, new discovery with estimated 72 million tons of inferred mineral resources. Remember that inferred means that they think they are there, but they have to dig a lot further to make sure. And then the Navidad in Argentina, one of the world's largest undeveloped silver deposits, also a thing they are working on. And the nice thing is that they have a lot of free cash flow. They have a lot of money in the bank, so they can start developing these sites and working on these projects without diluting the shareholder value. They don't have to issue new shares. They don't have to borrow a ton of money, because a lot of this work can be done with money they have in the bank. So that is actually a very, very good thing. And I think it shows some very good stability. Responsible mining, they have a lot of, if you are into mining but have heard a lot about the environmental impact on these minings, and there definitely are some. They have some responsible, some sustainability reporting here, and as you can see, and this of course is also the sales material, but there are a lot of, they are supporting a lot of different communities. safety hours, training. They're planting a lot of trees, a lot of family benefit, all the sales material here. But 99% of the employees are from countries where we operate, so they are not importing workforces from China or other places, as we have seen. They were talking about a gold mine in Greenland here. I live in Denmark, so that was in the news some years ago, and that was a Chinese company working on that, and that they would pretty much import 5,000 Chinese mining workers, so that would not really benefit the people in Greenland. So it never came to work, but it's just to say that they have their focus on that. You can read more about that. Here are a map of where the mines are located. There are a lot of descriptions here. Then, of course, we have the virus response. They're talking about how they are dealing with this. And as far as I can tell, they have dealt with it quite well. And they are mostly up and running now. All right, as investors, growth in quarterly revenue and so on, we can see here that total revenues in US millions here. You can see that the different metals are have different earning shares here, and as you can see, gold is actually their main earning driver. Even though that they are called a silver mine and is called Pan American Silver, they are actually produce something, I think it's 600,000 ounces of gold per year, which actually makes them one of the larger medium-sized gold producers. Of course, they're not up in the top with some of the largest gold producers, but they are a large gold producer, and I do like that because it gives a good hedge. If they were only a silver miner, they would not have been able to make money in the last years here. But I suspect the silver to shoot up now that the silver pricing also goes up. They also have zinc, lead, and copper up here. Not a lot, but they are one of the mining companies that are they're very good at making money on the byproducts when they are taking silver and gold out. These are some of the byproducts, some of the bimetals that comes out. They're not earning a huge amount on that, but it is great that they use it here. As you can see, operating margins are really going up. Operating margin per ounce it is here, and they have been very good at lowering their production prices. You can see here all-in sustaining costs. They have been going down massively, and there are several reasons for that. You can read about that here. But that is one of the reasons why I think this is a very interesting mine to be looking at. There are some more calculations here about the cash flow, and overall we can see that they have a very good balance sheet. So what this is, free cash flow allocated here. You can see how they use it, and there are a lot of numbers here, and they're also taking a look at the individual mines. You can see here the different countries, how they are producing gold and silver, how much from each. And a thing you should look at here is the AISC, all included cost here. That is quite interesting. When you're looking all over the entire circle here, they are running at around $10.50 per ounce silver. And that is very interesting, especially when we are looking at the price. Because if they were running at $10.50 and the price were down here around 12, that would be hard to make money. But right now, when the price is shooting up, that makes the earnings margins a lot larger. And of course, they will have sold something in advance on some futures contracts and so on, so they could make sure how much they got for it. So it's not that their earnings change with every tick up or down in price here. But it is something that as long as this trend stays up, or at least just goes sideways, it will in time end up on their balance sheet, no doubt about that. So $10.50 in the silver is absolutely reasonable. 948 per ounce in the gold is okay, not as low as we saw with the Caledonian the other day. I think they were down around at 750, but way enough to make some good money here. They have a slide here where we can see some of the stuff that that silver is used for. A lot of the green energy movement here, a lot in semiconductors, a lot in surgery, of course some jewelry, but actually it is mostly industrial. So there's something about the world silver supply and so on and so forth, not really something you need to dive into here. So the mines I mentioned one by one here, how large the reserves is. This is the Escobar, which is shut down right now, as I mentioned. But you can read that. I'll link to all of this material below. All right, so is the Pan American Silver Corporation a buy? Well, that depends how long time you are focusing out in the future. Because right now, looking at this with technical analysis goggles on here, I would say that I would wait, at least in the short term, I would wait for a little retracement. Also, a retracement in in silver might push the price a bit down. So what I would wait for was somewhere down here, see if I could get it around 32, 33, maybe 34. Have a look at some sort of retracement down here. The problem with that, of course, is that sometimes when we wait for a retracement, it never comes and it just shoots up. So if you are interested in putting some money in the Pan American here, you might put in a little position here and then wait for a retracement. And if it never comes and it just doubles in price, well, then you are at least in with some. But if a retracement comes, you can put some more money into it. But that is entirely up to you. I'm not a financial advisor, as you know, and this all depends on your risk and how long-term investor you are. Because if you think that something like Pan American can go to 100 within 2, 3, or 4 years, and I actually personally not think that is completely unrealistic, not if the silver price really bites up in these high ranges. Well, then I think Pan American Silver can at least double and maybe triple in price over a number of years. It's not something where we are going for something like the Nikola stock or something, a Tesla that is going up with 300% in a couple of months. I don't think that will happen again to the Pan American here. It already did, and I think maybe it will need a bit of a pause here, or at least a bit slower growth up. So if you are into owning this stock for 3 or 5 or 10 years, then I wouldn't really mind if I bought a 37 or 35 or 33, I would just buy. But if you are a bit more of a speculative swing trader, you might wait for a little retracement down here. Let's have the 20 SMA slowly move up here and have this one go somewhere to the 20 SMA and have a bounce up and then buy it there. That is entirely up to you, and it depends on your entire strategy and risk profile. So I hope this was inspirational for you, and I will definitely personally have a look at Pan American and have a look at it in the future, and I might take a position in it. I should mention also that is an important part here when we are talking about gold and silver. If we're just looking at the DXY, which is a dollar index, you can see that the dollar has been plummeting. It has really fell into the hole here lately. And that is, I think, partially because of the money printing from the Fed and so on. That's an entirely different debate. But as you might remember from my first mining video, I said that gold, and that also goes for silver, they are both often quoted in US dollars. And when the US dollars really dips down, then we often see gold and silver shoot up. So you could say that if you want to invest in something, let's see, I'm sitting here in Denmark, I want to put some money into US or Canadian stocks, but you are a bit nervous about the dollar dropping because that will make it harder for you to make money on your investments, then looking at some of the mining sector here with some of the strong stocks and buying them in US dollars could actually make that currency hedge very well suited for you. But that's just a thing you need to have in mind here. And of course, as well, if the dollar all of a sudden shoots up, then that would put a pressure on gold and silver, and of course also the mining industry. But then you would be invested in a currency that goes up, and that would hedge itself out as well. All right, that's all for now. I'll not take more of your time. I'll be back soon. Take care of yourself and your money out there, and remember to subscribe and like. Bye for now.